Banking Business Facilitators. Hey there, and welcome back to our show. Here we break down big banking ideas into everyday language. I'm your host for today, and today we are talking about something that is quietly changing millions of lives across rural India: the business facilitator. Now, close your eyes and think for a moment. What if you lived hours away from the nearest bank branch? No ATM, no mobile signal, just a pocket full of cash and nowhere safe to keep it. Friends, for millions of Indians in rural and remote areas, that's not a hypothetical situation. It's their everyday life. So today we are talking about a role that is quietly changing the reality. Yes, it is about the business facilitator. We have already discussed about business correspondent and their roles in our previous podcasts. So now, sit back and listen to this engaging content which increases your knowledge and curiosity in the subject of banking. The turning point of 2006. In January 2006, Reserve Bank of India issued a landmark guideline which was based on the recommendations of Khan Commission. For the first time, commercial banks, including RRBs and local area banks, were officially allowed to use intermediaries to deliver banking services across the country, especially in the remote parts. Two types of intermediaries were created. The first one, the business correspondent, and the second one, business facilitator. Together, both of them became the extended arms of Indian banking system. The business facilitator, guide, not a transactor. So, what exactly a business facilitator do? Now, think of them as a banking guide. A business facilitator helps customers understand the products, assist them in filling various banking forms, collect documents and forwards them to bank, and helps them with KYC norms, that is the verification. They promote saving habits, explain loan terms, and even market insurance and mutual fund products are sold by them. But here is the critical distinction between the business facilitator and business correspondent. A business facilitator cannot handle cash. They cannot open accounts or process any transactions on behalf of the bank. Their role is pure advisory and preparatory. They clear the path to the banking, but the bank itself completes journey. As for who can become a business facilitator, friends, RBI has kept this window very wide. NGOs, farmer clubs. As far as who can become a business facilitator, the Reserve Bank of India has kept the window very wide. NGOs, farmers clubs, cooperatives, post offices, village panchayats, Krishi Vigyan Kendras, and even IT companies are eligible to work as business facilitators. The logic is simple. Use institutions that rural communities already know and they trust them. Now, the question comes, what is the difference between business facilitator and the business correspondent? When we compare them, the business correspondent has full transactional power. They can accept deposits, process withdrawals, and issue passbooks on behalf of the bank. While the business facilitator cannot do any of that, and because of this, communities tend to place more confidence in business correspondents because they see immediate results. The business facilitator's value is more foundational, like building awareness, credit readiness, and bringing customers to the threshold of banking. Friends, the business facilitator and the business correspondent model is one of the India's most innovative policy tools for financial inclusion, bringing banking not just to the cities but to the every village, every corner of the country. Friends, If you are exploring a career in banking and financial services, understanding these roles is a great starting point. Thank you for listening me today. I would request you to subscribe, share, while I see you in the next episode. Thank you so much.